Bitcoin tends to have these moments where it goes up sharper than anybody thinks, and it goes down sharper than anybody thinks. Yeah, and so when you have such an inflexible supply, when you have such tightly held supply, when a lot of it's not even on exchanges, even a lot of the coins on exchanges are from people that are not even actively trading. They just leave some of their coins there, and so the amount that's pretty liquid is actually not that big. And so when a significant amount of capital wants to come in, that can move the price very quickly. If Bitcoin goes up tremendously and the daily moves begin to just overwhelm the rest of your assets and you're always thinking about it, yeah, it can make sense to take some off the table and put it back into equities or buy a real estate with it, or whatever you're, if you're holding back on a consumption, that might be the time to do it.
Lyn Alden, founder of Lyn Alden Investment Strategy and author of Broken Money, shares insights on the recent Bitcoin volatility, mentioning that if Bitcoin experiences a substantial surge, its daily fluctuations start overpowering other asset movements. The recent surge in Bitcoin prices has sparked speculation that it could be the last bull market before it becomes a mainstream asset class. Bitcoin has recently surged, surpassing the $44,000 mark for the first time in over a year and a half. The community is also looking at the Securities and Exchange Commission to greenlight the first spot Bitcoin ETF. Once it happens, it will solidify Bitcoin's position as a legitimate asset class, attracting more institutional investors and possibly driving prices higher. Global liquidity could be entering a new phase that poses trouble for over-indebted firms, an analysis published by the Bank for International Settlements finds. Lyn points out a robust link between Bitcoin's price and global liquidity. Throughout history, Bitcoin has thrived when global liquidity rises, whether through credit expansion or dollar depreciation. JP Morgan Chase CEO Jamie Dimon lashed out at Bitcoin and its peers, suggesting Wednesday on Capitol Hill that cryptocurrencies should be banned. "I've always been deeply opposed to crypto, Bitcoin, etc., the head of the largest U.S. bank by assets said under questioning from Senator Elizabeth Warren, Democrat Massachusetts, during a Senate Banking Committee hearing. The only true use case for it is criminals, drug traffickers, money laundering, tax avoidance. If I were the government, I'd close it down," he added. On the other hand, Alex Gladstein from the Human Rights Foundation in Kenya tweeted that the Bitcoin scene here in Kenya is inspiring. "People are building and sharing a peaceful escape from a broken system using creativity and love for others." During the interview, Lyn highlighted how the positive talks and movements endorsing Bitcoin's potential in Africa, juxtaposed with Dimon's critical comments, generate a fascinating shift in how people perceive Bitcoin's role within the financial sphere. Let's turn to the video to delve into Alden's market analysis. Before we get started, subscribe to the channel and click the bell icon for the latest updates.
Bitcoin tends to have these moments where it goes up sharper than anybody thinks, and it goes down sharper than anybody thinks. Yeah, and so when you have such an inflexible supply, when you have such tightly held supply, when a lot of it's not even on exchanges, even a lot of the coins on exchanges are from people that are not even actively trading. They just leave some of their coins there, and so the amount that's pretty liquid is actually not that big. And so when a significant amount of capital wants to come in, that can move the price very quickly. And I track a couple things. I mean, obviously the ETF news is probably being constructive towards it, the upcoming halving. Um, but another thing I track is that Bitcoin price correlates very heavily with global liquidity. There's different ways to measure global liquidity. I like to use simply global broad money supply (M2) in dollar denominated terms, and so it's basically it either goes up because credit and money printing are happening, or because the dollar is weakening compared to other major currencies. And there's historically when that's going up, usually Bitcoin's doing pretty well. When that's going down, usually Bitcoin's struggling for a period of time. And so all these factors together have been pretty constructive for Bitcoin. And it's just been a long bear market. A lot of the coins have rotated towards very strong hands, and so it only takes a small amount of new demand to move the price pretty disproportionately. And I tweeted about this earlier. It's really funny because basically the timeline today was hilarious. So on one hand, Alex Gladstein from the Human Rights Foundation is in Kenya, and people are doing a great event there, talking about how there's like a Bitcoin movement there, as there is in many countries. I mean, there's a Bitcoin Indonesia conference, right? They just had the Bitcoin Africa Bitcoin conference in Ghana. This group's now in Kenya, And it's this beautiful, colorful image of people talking about how Bitcoin gives them hope and allows them to kind of get out of this like trap that they're in terms of like constant dilution. Africa has something like 40 different currencies. So imagine all the frictions of global trade. If you're trying to earn money and save money, you're just constantly getting diluted in many cases. A lot of those countries can just freeze your bank account with no rule of law. That kind of thing happens all the time. And this is like a very proactive movement. And then on the other hand, you have Jamie Dimon coming in there, and he's sitting there talking about how this is like just money laundering and like the God forbid that people can just move money instantly and semi-anonymously. And it's like even the picture itself is gray and stuffy and older. And it's just, he could not be doing better marketing for Bitcoin than he's doing right now, in my opinion. But yeah, it does show that there are people out there that are powerful that would attack it. I mean, this picture is literally Cantillionaires 101, 101.
Lyn Alden offers a forecast for a U.S. recession and analyzes asset trends. Wall Street indices have continued to show significant strength as we approach the end of the year 2023. However, recessionary fears continue to hold strong going into 2024, with Bitcoin continuing to make substantial gains, shooting past $40,000. Last week, JP Morgan Chase CEO Jamie Dimon warned regarding the potential for further inflation and not ruling out the possibility of a recession. According to Lyn, there may need to be more than traditional recession indicators or employment metrics to forecast Bitcoin's movements. Instead, paying attention to liquidity measures such as the dollar index, market functionality, and seller activity is crucial. Now, let's delve into the video.
There's different types of recessions. The some of the recent recessions we've had, so the 2020 kind of lockdown crash, as well as the 2008 banking implosion. Those types of recessions had this big illiquid cascade, right? That basically liquidity dried up. The dollar got very strong, and pretty much everything correlates to one in those scenarios because there's all these forced sellers. And one way to think about it, especially on the global scale, is that if there's a sharp slowdown in economic activity, the debt starts to become a problem. So all these entities have debt in the U.S., outside of the U.S. Outside of the U.S., it's often denominated in dollars, even though it's not even owed to the U.S. Like some country in Latin America will owe dollars to China, or some country in Africa will owe dollars to France, for example. Um, or some entity in Indonesia will owe dollars to an entity in Japan. Um, and when this happens, cash flows dry up, but those debts and those interest payments are still due. And so there becomes a dollar shortage. There becomes like a currency shortage, ironically, because they're always printing more of it, but you can still have brief shortages. And so what happens is basically a lot of entities become forced sellers of any asset they have. And, before Bitcoin was around, people would look at gold during recessions, and often in the very early stage, gold would sell off. But then once liquidity measures came in, gold would recover more quickly than stocks, and it ended up being a really kind of good play through that cycle. With Bitcoin, I think generally speaking, if you have specifically a liquidity crisis, that's when you can get kind of a sharp sell-off in Bitcoin. And I think it'd be brief because I think that liquidity issue would be resolved. But not every recession has a big liquidity crunch associated with it, especially when you look back further, and especially when you look at certain emerging market recessions. You just don't really, and I think some of the recessions that we're going to see in developed countries have emerging market characteristics just because of how large some of the fiscal deficits are. Um, and so I wouldn't necessarily count on Bitcoin going down sharply. Now, it could go up to 60,000 and then come back down to 40,000 and then go back up again, right? So there are people that are not buying Bitcoin. They weren't buying Bitcoin at 20, 30,000 because they're worried about a correction next year. And it's like, well, where does that correction come from? Does it come down from a level that's twice as high as now and still higher than now? Does it start 50% higher than now and come back down to where it is now? Would we even get a liquidity crunch? And so I think that the question is less about recession itself. Like it's not really directly tied to employment in the U.S. It's not really directly tied to, just kind of various recessionary measures. It's really kind of tied to that liquidity, which is things like the dollar index, whether markets are functioning with liquid fashion. Are there forced sellers? Things like that. So I would incline towards, yeah, you probably would have a period of liquidity shock. Like if you run out of the reverse repo facility and we have a significant liquidity shock, Bitcoin might have a bad couple weeks, but I'd be a buyer of those dips. Interestingly, we saw back in the March 2023 kind of banking mini crisis, Bitcoin did really well right away, and so did assets. Basically, assets all basically immediately said, "Oh, the Fed's going to have to add liquidity here." And so Bitcoin and other assets went up in what otherwise could have been a liquidity problem just because they understood how fast some of this response time is. And so I generally err on not trying to be too kind of. I think there's going to be there's periods where people are going to get too smart with it, and therefore they're not going to do well, right? The people that were waiting to buy Bitcoin at 12,000, for example, are probably never going to see 12,000. Would be my guess. Um, and people that are always kind of waiting for the next correction. I think instead the right answer is either lump sum and then keep dollar cost averaging, or just maintain a position size so that if the asset goes down 30% or 50% in purchasing power, you're not affected. Bitcoin really should be capital that you don't need to access for 5+ years, so that you can let the thesis play out. And if you position it like that, and your position size is not so big that you're having sleepless nights because the asset's having a correction, um, then I think that's how I play it.
Experts say the growing confidence in the crypto market has been fueled by expectations of the U.S. Federal Reserve cutting interest rates in 2024 and the eventual approval of a Bitcoin ETF, which could drive up the price of the world's largest cryptocurrency. Feel free to share your thoughts in the comment section below. If you found this content informative, please give it a thumbs up and subscribe for the latest updates. Thank you for being here with us.